Good morning, everybody. It's Tuesday, October 15th, 5:25 a.m. Central Time. Grain markets are lower this morning. December corn futures down 2.5 at 405 3/4. November soybeans down 8.25 at 987 3/4. Ugly trade there. December Chicago wheat down 3 3/4 at 581.5. December Kansas City wheat down 3 at 587. December spring wheat is down 2.25 at 624.25. Let's start off with this pipeline story.
So, Robert F. Kennedy Jr. has been a vocal opponent of carbon pipelines. Last week, the 70-year-old independent, former Democrat, published a video on his YouTube channel that was highly critical of carbon pipelines, carbon capture, and the tax incentives being provided to large companies. Kennedy says the pipelines are far from green and that they will transfer wealth from working people to wealthy investors, costing taxpayers billions of dollars. In the video, Kennedy also addresses safety concerns and eminent domain issues. Kennedy, of course, has endorsed Donald Trump for president.
For the purposes of this podcast, I am going to remain totally agnostic about this issue. That being said, you guys should watch this video. It's very interesting. There were some things in there that I was not aware of. First off, the criticism of this will be that, Joe, this is just a political ad because it's a 26-minute video. And at the end of it, he says, you need to vote for Donald Trump because that's who I'm aligning with. I understand that part of it. If that's your criticism and you're going to throw it out and throw it in the trash because of that, fine. But you should watch it. He addresses a lot of things here. So the obvious ones are eminent domain abuse and issues, the safety issues, and he really goes into detail. And these were the kind of things that I wasn't aware of. He goes into detail about the financial incentives. And keep in mind, this is a guy who is a lifelong environmentalist. He's a hardcore environmental dude, and he has been very vocal against a lot of the green stuff that's out there right now. He's been an opponent of a lot of like the Bill Gates stuff and the Davos stuff and the World Economic Forum stuff. So, I mean, think about it what you will. I think it's worth a watch, though. This is a big issue for you guys. I will be the first to admit that we need more and better corn demand here within the United States. And a lot of people believe that this is how you get there. We do these carbon pipelines. We do capture and sequestration. We ultimately start using a ton of corn for ethanol for sustainable aviation fuel. But there's problems with this. There's problems. And RFK goes out of his way to describe all of them. So I think it's worth a watch, guys. If you're going to watch one thing today, I'd watch this. Make up your own mind.
So, corn and soybean futures declined on Monday. The December 24 corn contract lost nearly 8 cents per bushel to close near 408, marking its lowest daily close since September 20th. The November 24 soybean contract lost nearly 10 cents per bushel and closed below $10 for the first time since late August. Harvest pressure paired with USDA projections of burdensome supply and demand situations for both crops has helped to send prices lower. The funds had covered a huge portion of their net short position, but now appear to be shorting the market once again.
Yeah, funds were estimated to be fairly substantial sellers yesterday. So everything looks bad again. The corn market is kind of broken down technically. We had a nice uptrend in place. It appears to be busted. Maybe a little bit of support at that $4 area. We saw some lows there in September. Hope that we can hold above 4 in D's corn today. But a test of that 385 low that we posted back in August is not totally impossible. Soybeans look much worse. We're now below trend support and also below any of the lows that you saw in September. So I think that a test of that 955 low that we saw back in August is possible. It's just there's too many bearish things going on and there's not enough positive things. I think a lot of farmers are selling out of the field. There's definitely some harvest pressure. And I just don't know that there's enough here to convince the fund trader to really take a net long position in these markets.
U.S. corn and soybean harvest is moving quickly this week. As of Sunday, USDA estimated that 30% of the U.S. corn and 47% of the U.S. soybean crop had been harvested. These numbers are likely to be drastically higher next week, given another week of dry weather. Farmers in many areas are dealing with overage bushels due to big crops, which they cannot store and will deliver shortly, potentially adding pressure to the marketplace. Levels on the Mississippi River have again hit restrictive levels amid dry Midwest weather.
So there are some rains that may return to parts of the Corn Belt, like anything over an inch, maybe parts of Missouri, Illinois, up into Michigan, parts of Indiana, but that's not until the 27th. And I think by then, a lot of guys are going to be done. So this is going to be a very quick harvest season, very dry harvest season. The river levels are an issue, of course, because we are at the beginning of what is prime time U.S. soybean shipping season. We need to be shipping a lot of beans down the river for the export market, and there are already restrictions in place with regard to drafts and loads and that sort of thing. So it's problematic for a couple of reasons. It's going to add harvest pressure, and the river is another kind of negative issue.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Bar none, the most popular question that I've seen come in from our premium subscribers over the last couple of weeks is this: Joe, should I sell out of the field or should I store? And I think what people want me to tell them is which way the market's going to go, which way is the price going to go. And I don't know that. And even if I did, it's a hell of a lot more complicated than just that. Are you borrowing money and are you paying interest? And if so, can you quantify on a daily, monthly, weekly basis what you're paying in interest? Chris Barron was on yesterday, and we ran through these calculations and how to figure it out for yourself. For a lot of you guys, you may be paying tens of thousands of dollars in hidden interest costs because the rates are higher, because you're holding on to corn that is essentially collateral against your loan. And by holding on to it, it makes things very complicated. So even if I knew that the corn market was going up or down, there is a whole different set of things that you need to consider. Are you paying interest? Are you paying storage? What's your interest rate? Chris went through a whole bunch of different scenarios and kind of quantified this. And if you're not able to quantify it, you're not able to market your grain properly. So this is a video that is an absolute must watch. I think for a lot of you guys, I think it's super applicable. Chris made his free spreadsheet tool available for download, which is something that you've got to play around with. Again, I know you guys are busy. I know you're in the combine. I know you're in the truck. You can sign up for the premium deal in 30 seconds on your phone. We do Apple Pay, Google Pay. It's a piece of cake. And all the information that we send out is just one click in an email to open up the videos. So it's super easily accessible on your mobile device, which is, I know, what you guys are going to be doing. So check that video out. It's a must watch. Don't abandon your grain marketing during harvest. I know that that's something a lot of people do. It's tough to wear many hats this time of year, but you need to. If you're going to do it well, it requires some effort. This is a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody tries to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email, which includes that video and all of our recent stuff, guys.
Brazilian soybean planting is the slowest in 4 years. According to well-followed private group Ag Rural, as of last Thursday, Brazilian farmers had planted 8.2% of the total expected soybean area. During the same week last year, 17% of the crop was planted. The majority of the delay in planting is due to the slow pace in Mato Grosso. Farmers in the state are waiting for more consistent rainfall. Ag Rural also reported that 42% of Brazil's first corn crop had been planted as of last Thursday, up slightly from 41% last year.
There's rain on the radar again this morning, and the forecast is wet. Even just the next 5 days, you've got a bunch of rain in the forecast, and then the 10 days even wetter. You look at the GFS throughout the 15, and the rains just continue. Farmers won't plant in Brazil until these rains return, because if they do, it gets so incredibly dry that they risk emergence failure, they risk replant, and they just want to avoid that. So they wait. And it's not a big concern. And if there was any weather premium in the market because of this, it's now gone or in the process of being erased. The more important kind of weather market season with regard to, say, the soybean market and Brazilian weather will be, November, December, January. That's kind of like the heart of the growing season where you could run into a real crop scare event.
OPEC has reduced its global oil demand forecast for this year and 2025. The organization is projecting global oil consumption this year will increase by 1.9 million barrels per day, a drop of 5.3% from its previous estimate. The reduction is due to a decline in global fuel use. OPEC's demand outlook is still well above other industry projections. Reduced demand has caused OPEC to delay its plans to restore 2.2 million barrels per day of halted crude production. The additional production is now expected to be restored in December. In addition, Israel told the Biden administration yesterday that it would not strike Iranian oil facilities. Crude oil futures have fallen sharply from their early month highs.
Crude oil is down $3.64 in the December WTI this morning, which does not really help any of our commodity markets. This has been largely this rally that occurred beginning in say early September. It's largely a supply scare event. You've got conflict in the Middle East, and what do we know about grain markets with supply scare events? Those are typically some of your better selling opportunities. I don't know that crude is any different. And now, yesterday afternoon, Israel coming out and saying, hey, we're not going to target oil facilities. We're going to target more like military type stuff. That resulted in sharply lower prices. So this crude thing is kind of a bad deal for a number of things. It indicates just poor global economy, maybe just lack of demand, which is in a roundabout way not positive for grains either. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were down 35 cents to 50 cents higher. Feeders were down 62 cents to $1.20 higher. Box beef was higher yesterday. Choice ended the day at $313.32. That was up $2.10. And select ended the day at $289.10. That was up 38 cents.
Outside markets mixed this morning. U.S. dollars off a little bit. Stocks are about flat, but did post all-time highs again yesterday in the S&P and the Dow, I believe. Bonds are up almost a full handle. Gold's up $6. Crude oil, again, down sharply off $3.65 in the December WTI, $69.60 last trade. Have a great day, guys. We'll be back on Wednesday